Good morning, hello and welcome to Opening Bell. Thank you for joining us here on our Money Control YouTube live markets programming. I'm Surabhi Upadhyay. It's Monday morning and yes, it's a manic Monday, but you know what? I don't want to start with the bad news. I want to start with the good news. And the good news is that the men in blue, the boys in blue have done it again. Scenes of jubilation yesterday as India become the only country to lift that trophy second time in a row. So the cup stays at home. And what scenes and what celebrations yesterday. I mean, they all did it. They all came out and got counted, whether it was Samson, Akshar Patel, and of course our beloved Bumrah, the entire team coming together so nicely, and scenes of celebration. And the jinx of the so-called jinx of the Narendra Modi Stadium got broken finally. Packed stadium, sea of blue, electric atmosphere, and some fantastic scenes by the time the night finally got over. So that was. Yeah, let the visuals just play. I'll not speak. Let the visuals do the talking for a bit. Yeah. So that's the jubilation. Those were the fireworks. Yeah, you can see. And the celebrations went on late in the night, throughout the country really. Here, in Mumbai on Marine Drive, across all parts of the country. Of course, Ahmedabad itself. There you see. What pride, what glory. Just simply fantastic. One will argue that, okay, it was a bit of a one-way game, so not much of a tight contest, but, it's fine as long as we got the cup. That's what really matters. That's the good news. However, now after that good news, we do have to come back and look at the reality of the morning. And that reality is a very difficult one. Over the weekend, unfortunately, we haven't had any positive developments on the war. In fact, developments have only been negative. The overtures made by the Iranians to start some kind of a dialogue, their offer that they will not bomb their neighboring states, all of that got undone in a jiffy. And by Sunday night, the visuals coming out of Iran were absolutely shocking. Fires raging across oil depot, reports of, oil rain, so on and so forth coming through, because just look at that massive destruction and absolutely no let up in hostilities. That has led to a complete Monday mayhem across markets, if I could call it that. Now let's put the prices on the board. Crude oil prices in my 20 years of reporting career, I don't remember oil in a single day, rising 20-25%, but that's what we have ongoing right now. Let's get the prices on the screen. Just unbelievable levels over there. Like I'm saying, I've been reporting on markets since 2005. I don't remember a morning where oil was up 23-24%. These are historic times. I think after the 91 Gulf War, this is the first time the world is witnessing something like this. And many will argue that the Gulf War was still limited. It was Iraq and Kuwait, and the rest of the region didn't get involved. But this is a full-blown West Asia war at hand with no signs of any cessation in hostilities. So that's oil. There is an immediate risk off. So you're seeing a surge on the dollar index. Let's get the dollar index back up on the screen. It has comfortably sailed past the 99 handle. And US markets are giving their first interpretation. Look at that, 99.60 almost on the dollar index. And the US markets are giving their first interpretation of the risk off. Yields in the US are surging. The 10-year yield has crossed 4.2%. It's a complete flight to safety. Gold, interestingly, is not becoming the commodity that is seen as the biggest safe haven right now, because gold has rallied. There's a lot of churn in the gold markets, but the flight to safety is taking people towards US assets, which is US treasuries and the dollar. And some astounding numbers coming out of Asian markets as well today. The Kospi was collapsing 8%. There was a circuit filter that got triggered on the Kospi. The Nikkei is still down about 6-7%, and markets like Taiwan and Hong Kong, all of them down between 2 to 3%. So that's what we have ongoing. Let's pull up some of the Asian markets as well now if we can. And aside of all of this, you've got Dow futures, which are indicating a 1,000-point drop when US markets open. And then you have our own, GIFT Nifty. The index is indicating that we'll start with an 800-point gap down. So strap up. It's going to be a difficult morning. Hopefully things settle. But it all depends on those statements coming out of West Asia, and they have not helped humanity or the market's cause. Let's get you all the top headlines this Monday morning. Crude oil prices soar past $110 per barrel as the war in West Asia escalates. The surge comes as US and Israel's war continue on Iran, and traffic along the Strait of Hormuz remains at near halt. Iranian forces have attacked ships attempting to pass through. US President Donald Trump says that the current oil price is a small price to pay amidst the conflict with Iran. The war in West Asia enters its second week as US and Israel continue strikes on the country, with explosions reported in Qom and Tehran hours after Israeli attacks on oil facilities caused toxic smoke across the Iranian capital. Iran also launches missiles in Saudi Arabia, Kuwait and the UAE. Also reports that Iranian drones have attacked the region over the weekend with varying degrees of damage. Mojtaba Khamenei will replace his father Ayatollah Ali Khamenei as the country's new supreme leader, with political leaders and military pledging their allegiance to him. US President Trump asserts that he would exert influence over Iran's new supreme leader and called Mojtaba Khamenei lightweight before his appointment. Wall Street futures tumble as oil prices surge, going through the roof. The Dow futures are down almost 1,000 points. S&P 500 futures down about 1.5%. Nasdaq futures collapsing 2%. Markets in Asia have seen a drop of as much as 8% on the Kospi. The GIFT Nifty is indicating a big gap down for our markets. And in better news, of course, India's cricket champs dish out a commanding performance to claim the ICC Men's World T20 title after defeating New Zealand by 96 runs, claiming their third World Cup title and defending their previous win. Okay, now very quickly, just to go back to the numbers, what we're seeing on Brent is an unchecked rally. These are those times where it's very hard to call tops on a commodity like oil or bottoms on asset classes like equities, and that's what's playing out. Kuwait, UAE and Iraq have cut oil output. There were reports that Kuwait is completely halting because they have no place to keep the oil. How much oil can the ships hold? And the ships are anyway stranded and they're stuck at the Strait of Hormuz, and that is what's led to this massive 25% surge. Last week, oil rallied 35%, and this morning you're seeing 24%. Now, these shocks don't last forever, but how long is forever? What is the definition of this absolute chaos? That is very hard to call at this point in time. Like I said, there's a big risk-off move, so US yields are surging over 4.2% on the US 10-year. The dollar is spiking higher. Iran initially had actually promised to suspend strikes on neighboring states, but then we had President Trump's post which came out, triggering hostilities all over again. And I'm just, reading out the operative parts, and this was a Saturday quote where he said that Iran, which is being beat to hell, has apologized and surrendered to its Middle East neighbors. Iran is no longer the bully of the Middle East. They are instead the loser of the Middle East and will be for many decades until they surrender, or more so completely collapse. And it was really this tweet, and I think this post is going to be remembered as the post that escalated this war and got this war into another orbit. This post came out just hours after the Iranian side had offered to stop at least attacking their neighbors. They had made certain overtures about starting some sort of a diplomatic dialogue, but then this post came out and it all went to hell literally from that point onwards. On Friday anyway, global markets were down. The Dow, the S&P 500, the Nasdaq, all were down between 1.5% to 2% anyway, because there was a big risk off. European markets were lower as well. And in addition to all the West Asia problems, we had the jobs report come out on Friday. So very quickly, that jobs report was a big disappointment. In February, the US economy has lost 92,000 jobs versus expectations of the increase of 50,000. So yeah, that's what I'm talking about. Let's move that play to the next one. That's where the jobs data comes up, because that's another negative for the market. Not that it's the biggest negative at this point in time, but that jobs report was bad. The unemployment rate has inched up to 4.4%. And another issue, which is the private credit market in the US, and that also is giving constant worry to market participants. BlackRock shares were down 7%. BlackRock capped withdrawals from one of its private credit funds, and that kept on sending nervousness across the screen as well. Now, for us, the Nifty has already lost 3% last week. The VIX is up about 11-12% on Friday itself. But Friday's losses do not mean that we suddenly bounce back today. This is one of those mornings where you just stand back, let things play out and then decide what to do. FPIs have sold off 21,000 crores so far in March. That is the entire amount of money they put in February. All that has already gone out because of the complete risk aversion that has gripped global markets. That's where we are at this Monday morning. So what to do in a market like this? That's the question. Vishnukant Upadhyay is with us. He's president of research and advisory at Master Capital Services. And we have Ashish Chaturmota joining in, who is the managing director at JM Financial. Gentlemen, good morning. Thanks for joining in. I was really hoping we'll come back to good news and only talk about how the cricket team and, how positivity comes back to the market. But unfortunately, it's a perfect storm this Monday. Ashish, let me open with you. We'll get that gap down, probably 1.5-2% gap down. What should people do? And right now I'm talking about the shorter term traders, 1 day, 2 day, intraday or, intra-week traders. What would you advise them? Should they do anything at all, or is this the morning where you just stay out for some time?
Good morning, Surabhi. So, since obviously, first of all, congratulations to you and the entire viewers for the kind of match yesterday we witnessed, and it was really very energetic. Now coming to today, obviously yes, there's a lot of uncertainty which is going around. In fact, there was a belief that this de-escalation has started happening and this might result into some kind of positivity in the market. But in the last 2 days, we have seen this has further escalated, and this will have a real impact on the energy prices, which is getting reflected into crude, into gases, into LPG, into LNG, and all these is getting reflected into the stock prices of a lot of these companies. If they are the consumers, then definitely they are getting severely impacted because of this. All in all, I think from a broader level index perspective, since you mentioned the shorter term trade, we have already breached the 200-day moving average with very strong volumes. And since index is trading below 25,200 on a sustainable basis, and since now we are going to see a gap down opening, this is going to further put pressure on the market. So completely one should, as a trader, should avoid this market from a shorter term perspective. Let the market stabilize at some point of time, and then only any fresh trade could be initiated. From a sector perspective, we like wires and cables, defense, and some of the public sector undertakings, because they are the big beneficiary of these kind of rising crude prices. So CPSC ETF is something which is a very good proxy trade to play the entire the value theme. But all this should be bought in a staggered manner rather than at one go, because looking into the market uncertainty.
Okay, all right, got that point. Vishnu, let me ask you as well. Now, a lot of people were watching for this level of 24,300 very carefully, and last week you were taking heart from the fact that, chalo, at least this is holding, it's not gone. But now we get this gap down. GIFT Nifty indicated a 600-700 point gap down. What would you do today?
Yes, definitely. First of all, a very good morning. Definitely, we are set to see a very huge gap down opening in today's trading session. Market will somewhere open around 23,900, 23,800. But I believe this, turmoil in the market is likely to extend towards 23,500, 23,400. And that's a very crucial support. 23,500 is a very crucial support from the technical point of the view. And it's also, somewhere around 50% retracement of the previous major up leg. But I believe this, bearish sentiments are likely to remain intact, and there is no any buying opportunity in the market, at least for a short term or for an intraday. But yes, I would like to highlight one point, that I'm not expecting market to fall below 22,800 sort of levels. So there could be any golden opportunity for a long-term investors who wants to put money in Nifty ETF. So for a very short term intraday, definitely there is no buying opportunity. If market takes bounce somewhere around 24,100, there could be an opportunity to build a fresh sell positions. But for a long-term investors, fall close to 23,500 or 23,000 sort of levels will give an opportunity for a ETF, Nifty ETF buyers.
Nifty ETF. Imagine our guests are today talking about Nifty ETF. It's that kind of a market. It's that kind of a geopolitical situation that we are dealing with. Absolutely. By the way, we've started getting some queries on our live conversation, the live chat on YouTube as well. Shiva is asking, "Aaj gold kaisa rahega?" And someone is asking for bank stocks, whether bank stocks can be a safe haven. We'll get to all of these queries. Viewers, good morning to all of you who are joining us live on YouTube. Ashish, actually, let me take up the gold question. I think it's confounding a lot of people. Typically, in times like these, when there is such a big war, you'd expect gold to be up 5, 6, 7%. But that's not happened over the last week, this morning as well. The risk off is showing up more in US yields. It's showing up in the dollar, not in gold. Are you expecting that to change anytime soon?
So yes, the shorter term, obviously, there's a shift to safe haven, and the safe haven this time is dollar because of the rising yield and because the inflation is going to cross the tolerance level, and this is also going to create a lot of pressure on a lot of growth companies. But as far as gold is concerned, or gold obviously would be a beneficiary of these kind of extreme uncertain environment, and it would be a good hedge. So definitely yes, in the shorter term, dollar index is doing well, but from a medium to long term perspective, it looks like gold is a very good entry point. Gold looks like a very safe bet in current environment. We need to understand at this point of time, three things are playing out. One, inflation is going to go up. Commodity prices are going to go up significantly. This will make sure interest rates don't come down, and if interest rates starts to pick up, then yields are going to harden. This is going to further put dollar index in a comfortable position. But at the same time, rising yields will also benefit a lot of banking stocks, because the NIM expansion will start happening. So I think banks will be a very attractive opportunity on apart from gold. So I think from a market perspective, one can look into private banks and PSU banks, good quality large cap and the public sector undertaking banks. That would be a good bet in current environment.
Okay, so PSU banks and private sector banks, Ashish has given his thumbs up to this. Since we're talking banks, Vishnu, if you could weigh in on overall the bank nifty, because the thing is, on Friday, even banks were falling. The bank nifty came down to its budget day low. So it was almost like nothing is getting spared in the market. But anyway, levels. And we have a viewer who's asking about DCB banks, especially. And he's not looking at short-term trading. He's saying 1 year investment. I want to invest in bank stocks. Is DCB bank a good bet? Should he look at something else? So maybe some bank stocks technically, and then Ashish will come back to you for your picks. I mean, from a fundamental investment perspective, which banks to look at? You go on the technicals first, Vishnu.
For a DCB bank, I would say, the structure is a little positive because the prices are currently holding its previous swing low, which is currently positioning somewhere around 166. So technically, apart from that, that level also aligns in a very proximity of 200 exponential moving average. Well, so from technical standpoints, as long as prices are above 162, 163, we can accumulate the bank. But yes, any decisive fall below 162 will turn the stock in a short-term bearish phase. So for now, currently, I would say yes, go for a DCB bank for a target of 185 and maintain a stop loss below 162. While talking about bank nifty, so Surabhi, bank nifty is currently, if we look at the Friday closing, prices, hold decisively above a 200-day exponential moving average. But in today's trading session, this level will be taken out. And I believe there will be a pressure from the especially private banks. So I'm also expecting bank nifty to trade with a bearish trajectory, and there will be a selling opportunity as well in bank nifty. So there is no any buying opportunity. On a higher level, I'm expecting rise close to somewhere around 57,200 will give you an opportunity to create a fresh selling position in intraday.
Okay, got that. Vishnu, thanks for the levels there. Ashish, you said that in a market like this, one can look at some private sector and a lot of PSU names as well. Which ones would you go for and why?
So, Surbi, definitely from a shorter term perspective, obviously there is going to be a lot of volatility. But when we discuss any opportunity, it's more from a medium to long term perspective. And keeping this in mind, I think the stage is set for a lot of these banking sector to do well, because first the valuation. If you look at most of the private banks, whether it's HDFC, Axis, ICICI, the top quality ones, they are trading in a range between 2 to 2.5 times price to book on a forward basis, and that's a very very comfortable valuation zone for a lot of these private banks. Second is the growth. If you look at the credit growth for a lot of these private banks, it has started picking up, and for few of them, we have seen almost 14 to 15% kind of credit growth environment, and that's very very encouraging from a return on assets perspective. Because if the growth improves, and if you see the NIM also getting expanded because of rising interest rate environment, this is also going to see a rise in the return on assets for a lot of these banks. So keeping this in mind, Axis Bank, ICICI Bank, these would be my first top two picks within the private banking basket. In the PSU banking basket, we like SBI, and we also like to play the entire PSU banks through PSU Bank B's ETF. The reason being, most of these PSU banks are trading around 1 time price to book, and but from an operational parameter perspective, most of these PSU banks are seeing a very very strong credit growth environment. So keeping them on in line with what private banks are doing on the growth side. So with this context, I think even the PSU banks from a growth perspective looks quite encouraging. And in days to come, we think this valuation can hit 1.5, 1.6 time price to book. So keeping this in mind, SBI and PSU Bank Bs would be our top pick within the PSU banking basket.
Okay, all right, got that. So that's as far as some banking ideas are concerned. By the way, US futures are still down between 2% to 2.5%. So markets are still looking at things very, very tentatively, and oil is where it is. On oil and gas names itself, Ashish, there's going to be a direct hit, right? At oil at 115. The dynamics for India are very, very different, and we're going to be speaking to an oil and gas analyst for more specifics on this. But say stocks like L&T, which have a indirect impact and which have fallen a lot, what would you say? I mean, even long-term fundamental buyers, will they find better levels? So is it best to wait? Or do you think that today is as good a day as any? Because a lot of these side stocks, engineering companies, sugar companies, rice exporters, all of them are seeing collateral damage of this crisis. Ashish?
So L&T also, because of its Middle East exposure, should be almost 73% of the international businesses coming from the Middle East, and that's going to get impacted. In fact, if you look at the incremental order book, 80 to 90% of that incremental order book was from the Middle East. So definitely L&T has got some serious challenges because of these challenging environment in the Middle East. So on downside, I think L&T can see some correction, and I think we should not be in a hurry to take any fresh entry into L&T, because till the time it doesn't settles down, I think this is one stock which can have an impact. But if I have to look into other capital goods players, so companies like Cummins and ABB could be a big beneficiary because of the AI trade, and since a lot of these data center and gensets requirement will start coming up, so I think Cummins is our top pick within this entire space.
Cummins, okay, got that. So Cummins remains one of the ideas. I'll come back to Ashish for more, and of course we have to take top trades with Vishnu as well. But we'll just dip into a lot of the quotes, because at the end of the day, the market is reacting to commentary, to rhetoric. Some of it is just rhetoric, some of it is real. But who is really saying what as this war rages on across the Middle East? Take a look at the positioning, because none of the quotes or the posts or the tweets, none of them are reconciliatory in nature, at least as of now. Check out some of the international market prices as well, and we'll be back with the top trades of the day. Okay, so that's the hit. That's the first of the pre-open rates as they're coming through. They're actually a little better than what the GIFT Nifty was indicating. GIFT Nifty was indicating an even bigger slide. This is a 500-point drop at the open. So 24,000 obviously is under threat, and that's the initial hit. The question is whether actual fundamental long-term buyers will come back in. And that's what, for instance, Ashish is also saying, that these could be great levels to get in and actually start building your portfolios. And those buyers will definitely come in at some point. Now, whether they come in the morning or the afternoon or by when, we don't know. But these are the initial sort of rates that we are getting. I want to talk about a couple of the Nifty stocks, which are really right now taking it on the chin. So 10% down on Adani Ports. Let's pull up the stocks. There were a lot of reports coming through yesterday that there's been significant damage on Haifa port, that Iran has inflicted a lot of damage. This was not confirmed by the Adani group, but the concerns are very much there. They do have assets in that region, and the concern is really showing up on the screen. 10% down. Interglobe Aviation, for very obvious reasons, is down about 6.5%. Then you have JSW Steel, Shriram Finance. Actually, we can just fire all the Nifty losers now at this point in time, really, because all of them are down and under pressure. HDFC Bank, Shriram Finance, Bharti Airtel, ICICI Bank, all of them coming up on your screens. Power Grid, Asian Paints, SBI Life. So it's pretty much across the board. Tata Steel, Eternal, Reliance itself, which is down about 2%. And there's no surprise here. Obviously, it is that morning where everything gets hit in the first wave, and then you see what happens later. On the flip side, ONGC is rallying 7.5% right now for obvious reasons. I mean, there's a 23% jump in oil prices, and a lot of that straight away flows in to the bottom line if the government does not impose any additional taxes like the windfall tax on these upstream companies. So there you see, those are the gainers. ONGC is really the only one worth talking about. If I talk about gainers, we should also probably look at Oil India. Oil India is up 8.5%. So beyond the Nifty, obviously ONGC is up, and Oil India, again an upstream oil company, which benefits from higher oil and gas prices. So Oil India is up about 8.5%. Let's see what else. MRPL is up about 4%, at least at this point in time. That's Oil India. So these are some of the stocks that are managing to hold out. But then it's a long list of losers out there in the broader market. IOC 10%. So that's MRPL. But look at the other oil refiners which refine oil and sell oil at the pump level, because they're going to be sitting on losses now, on marketing margins, on blended margins. That's something that Prabal Sen of ICICI also explained to us last week. And look at that play out on the stock prices. 8%. BPCL is down 9%, HPCL is down 10%. Let's pull up the others as well. BPCL and HPCL, all the oil marketing companies have been slammed because the price of oil right now means a big loss in their statement, profit and loss statement for all these companies, and that's showing up. What else? Misho's got a big tax notice. We'll talk about this on our stocks and news list. Misho is down about 8.5% as well. Go Digit is lower. What else? Lots of stocks actually on the losing side. Quality Walls is lower, came out with numbers. So plenty of movers and shakers on your screen. Let's keep flashing some of the other mid-cap stocks as well, both mid-cap gainers and mid-cap losers. Obviously, there are far many losers than gainers. It is that kind of a morning. A lot of metal stocks also actually fairly weak. They're not able to buck the trend. Then you have names from the defense pack like Solar, which are seeing some traction this morning. Look at that. Maasgaon, Bharat Dynamics, Cochin. The only thing that's up on the green side is defense all over again. Some of the gas stocks on your screen, and all of them are dealing with losses as well, at least at this point in time. Lots of PSU banks, Bank of India, Union Bank, IDBI Bank, all of them are down. Private sector names like RBL Bank, all of financials very weak at this juncture. Okay, Vishnu, so now we've seen the hit. The Nifty is down over 500 points, by the way. Now Nifty is down 540 points. Let's run through your top trades.
Well, so in Nifty, having said that, I would prefer to adopt a sell positions on any correctional rise. So as you stated that prices are all set to open somewhere around 24,000. So it's a very crucial level, right? It's a very psychological level, 24,000, because we have seen a very huge put writers at this zone. So if prices sustainably fall below this level, 23,800 will be our next support, and then 23,600 will be next support. So I would prefer to form a sell positions on any corrective rise. 24,100 will be my favorite level to build sorry, to build a fresh sell positions with keeping a stop loss above 24,250. This is my view in Nifty. While in stocks, I would prefer to build a sell position in Ashok Leyland. Right, on a Friday, we have seen prices are toppling sharply below its a 21-day exponential moving average, and currently it is heading towards 180 sort of levels, 182, 180 sort of levels. So here is my sell recommendation in Ashok Leyland, having a stop loss above 202, and targets will be somewhere around 185, 180.
Okay, got that. Vishnu, by the way, this morning we have so many questions on financials. I'll just leave you with the stock names and then I'll come back. By the time you can check the charts. There is Rishi Ranjan asking about HDFC Bank. He's saying, I bought at 999 and I'm looking at a long-term investment, but obviously he's worried because the stock price has fallen below his acquisition price. So there's a query on HDFC Bank. There's a query on whether LIC and SBI are good for the long term. Then we have a viewer asking about Muthoot Finance. He bought at 3681. So lots of questions on banks and NBFCs. Vishnu, I'm going to come back. In the meantime, I request you to check up some of these charts. And let's actually address, in the meantime, while we come back with viewers, we're coming back with your answers. In the meantime, let's also quickly talk about the big story of the morning, and that is what is happening to oil prices. We have with us Pranav joining in from JM Financials. Pranav, thanks so much for being with us this morning. I mean, who would have thought? I've been reporting on these markets for 20 years. I'd never thought I'll wake up to one day, single day, and just that single morning and look at a 24% increase in oil prices. What have you made of it?
It's completely, it's not surprising, I can say, that, what has been happening over the past week, that oil should not have rallied so much. But the only thing is the oil prices are reacting to, traders, or we can say the reaction to the oil prices has been most on the statements that has been coming out from the Middle East officials. Last Friday, we saw Qatar's finance minister saying, an official from Qatar saying that oil prices could jump back to $150 towards $150 if this continues to escalate. So this remains a bit, the actual ground situation, we are not yet, we don't know what is happening there. But the thing is, whatever the reports, the news that has been coming out is not good from the oil price perspective. The 20% of the crude market is already choked off from there. There are possibilities that the oil output has gone down. Now there are reports coming in that if the oil wells are still in operation in the Middle East, so that is one good news, that because this, if once everything shut down, it becomes very difficult to restart them. It will take at least couple of months or more than 3 months also to restart everything and then resume normal operations there. So this is the spike that we see in crude prices. If any kind of de-escalation only can bring these prices down, or there could be possibility that we may see some the oil prices being released from the strategic reserves globally to tamp down this oil price rally. Otherwise, if this escalation continues, 150 remains very much in close for crude in the near term, possibly this week itself.
Absolutely. Oh, absolutely. I mean, these are scary levels, but the US president says it's a small price to pay. We'll keep putting that tweet up because according to him, this is not much. And clearly, all this has happened, by the way, US's own calls that they will get Strait of Hormuz open and there'll be safe passage of ships, etc., etc. All that has absolutely fallen on deaf ears. Nothing is working. The market knows the reality. Hormuz is choked. And these suppliers in West Asia now don't know where to keep the oil. And therefore, they have started to cut productions. It's pretty serious stuff that's playing out. In terms of, by the way, the currency is also opened up. We should fire up the rupee as well. Let's look at the rupee. It has, it's hitting, again, record lows. 92.23 on the screen like I'm seeing right now. It had hit a low of 92.15 last week, early last week, and then there was some recovery in the rupee, but look at it, 0.5% down. And this is exactly mirroring the dollar index. Now flip this with the dollar index. The dollar index has seen a 0.5% gain. It's surging to 99.50, almost, now talking about 100 levels on the dollar index. And the rupee is weakening, as are most currencies, most Asian currencies this morning as well. Pranav, let's talk some levels now. It's hard, but I don't know. 120, 125, and it can also reverse quickly, right? One small hint of diplomacy, all this can reverse in a flash. So traders should be very nimble, I'm guessing. What would your advice be on crude trades, if at all?
For crude trade, first thing is we avoid going in for any fresh trades at current price, either on the buy side or on the sell side. Because why on the buy side I'm selling avoid? Because we don't know how much it's going to go up. Any diplomacy, as you said, as if any diplomatic news that comes out will trigger a immediate sell off of 10-12% immediately. Whether the outcome of the diplomacy is going to come out or not, that is a different question, but it will immediately give us an impact. On the sell side, we don't know how much it can go up. The best way to trade crude is buy the options if they are liquid in front of you. At the money options, you can buy, call or put. Anyways, the volatility is expected to remain high. We may see more than 7-8% of a move in coming trading sessions in a day. So this will give you an opportunity to trade. Even in options also, if you're trading, my advice would be keep a stop loss, whatever is that option difference that you are buying, the premium that you're buying, keep a 100 rupees stop loss, 150 rupees stop loss and trade, and go accordingly in your positions, because the volatility is expected to remain high. If you get a positive revenue of the profits of 100, 150, 1:1, book profits, look to re-enter again. So that is the best strategy that we can do in crude at this point of time.
Okay, and very quickly, we're hitting market opening now. So Pranav, just very quickly, levels on the rupee to watch?
91 is the support. Till last week, we were holding that support at 90. Unless and until the 90 is not breached, we don't expect rupee to appreciate. Now we have trailed that support to 91. Till 91 is not breached, we don't expect rupee to witness any strong appreciation apart from any RBI intervention or a strong intervention that unlike last week, we saw the RBI intervening towards 91.60. But after that, they left it again and we are again at close to 92.50 levels. So till 91 is not breached, rupee is expected to remain under selling pressure. We see rupee moving up close to 93.50, 95 levels in the near term.
Okay, all right, Pranav, thank you very much. That's helpful advice this morning. We'll keep those levels in mind. And also what you said, the caution on oil trades, be very careful if you're going long. Be equally careful if you're going short. You can get whipsawed on both sides of the trade. It's that kind of a market. Thanks very much. Have a great day and we'll connect again soon. Vishnu's been waiting for us to give us some final ideas. Vishnu, so like I said, a lot of interest in bank and NBFC stocks this morning. Your thoughts, SBI, LIC, these were some of the financial names that I was getting. Muthoot Finance, this is what people were looking at.
Well, so Subhi, the stock that you have mentioned, like HDFC, Muthoot Finance, SBI, LIC, they all are a portfolio stocks. But yes, undoubtedly, all stocks are down around 20%, 22% from their 52-week high. And one thing I would like to add here is that we can't afford to miss such kind of opportunity where we get these portfolio stocks with such huge discount, right? So looking at a HDFC Bank, price is undoubtedly in a bearish trading with a bearish structure and likely to extend this ongoing fall towards 800 or 790 sort of levels. But yes, for a long-term investors, I would say keep accumulating the stock because it has a very crucial support somewhere around 770. So yes, keep accumulating the stock as long as prices are trading about 770. But in all these four picks, I would like to add SBI Bank, which is a more and more strong counter, and currently trading about it's a 21-day, 21-week exponential moving average. So yes, if prices comes up close to 1080, then you can go long in the stock. Keep stop loss below 1040.
Okay, all right. By the way, the market has opened up and we do have that 500-point drop right at the start. And the Nifty has lost 24,000 for now, at least. Like I'm saying, there would be long-term buyers. I mean, the investors who will use these dips to buy, they'll come in at some point, but maybe not immediately in the morning. So we just have to wait this one out and see where things settle. Okay, let's talk about what's weak. By the way, all the indices are down. The Bank Nifty is the one that's falling the most. And my sense is the reason why banks have started falling so much is that there are real concerns on the macro building up. Concerns about what happens, concerns about fiscal deficit, concerns about what oil at 120 or 114 or 115, wherever it is this morning, what does it mean for India's macros? And those are big issues, issues around the currency itself, which is again sliding. And a lot of that is now showing up in bank stocks. Yields have been rising because global markets are taking the view that central banks will not be offering too much of liquidity or cutting rates given the inflationary concerns. And a lot of that seems to be explaining why suddenly there is a big risk off around financial stocks. Look at the bank nifty. It's a one-way slide on the bank nifty. It's down 3.5% after dropping so much on Friday. It fell more than the nifty even on Friday. Banks are sensitive. Okay, let's see. Nifty losers. That's the Nifty Bank. That's the index that's falling the most today. It's not able to provide any support. It's in fact getting hit very hard because India's macros are going to be under scrutiny given that we are so sensitive to the direction of oil prices. Let's look at the stocks now. Okay, so what's happening on the Nifty? Interglobe Aviation, Shriram Finance, Asian Paints, L&T, Adani Ports, Maruti Suzuki, you name it. I mean, it's across the board. Doesn't matter. Sectors don't really matter. It's the whole wave is red and everything is getting hit at least at this point in time. Geo Financial, State Bank of India is down about 4%. Eternal, Bajaj Finance, Maruti, Tata Steel, HDFC Bank, M&M, ICICI Bank, everything is, simply seeing that risk off today. Interglobe is down now about almost 6%. SBI, there was a brief, I think, green trade, but no, it's still down. The only stock that is up is actually ONGC, but ONGC is also not rallying big time. The pre-open was suggesting that ONGC can pop 6-7%, but we're not seeing that in the actual market open. In fact, let me check up Oil India. Pull up Oil India as well. ONGC is there. We'll just get Oil India up for you to see what's going on over there. But no major moves on these upstream oil producers. And the reason is exactly what we've been discussing with our guests, because this big spike of 23% can turn in a matter of minutes, in a matter of hours. The moment there is a post, a tweet, a statement saying that Iran has entered diplomacy, the first knee-jerk reaction of the market is going to be to take this huge amount of risk premium off. Where the truth finally settles and where the war settles is another question altogether. But there will be that reaction in the market where oil cools off quickly. So people are careful in taking long trades on names like Oil India and ONGC as well. So you have to read between the lines and go to the nuances. It's not a very simple market to trade. That's the point that I'm really making. Okay, let's see what else is happening on the gainers and losers tally. On the losing side, obviously oil marketing companies are there. So IOC is down about 6-7%, BPCL is down 6-7%. See, for them, the losses continue. Now, whether it's oil at 114, oil at 100, oil at 105, 90, they still make losses. So that hasn't changed. These companies were looking at oil at about 65 not too long ago, just about 2 weeks ago. And today we're looking at 114. So for them, the reality, operating reality has changed. And that's why the market is taking a very negative view. All the oil marketing companies are lower. What else is down? A lot of PSU banks are falling big time. Union Bank, PNB. Let's pull up all the banking losers. The bank nifty is absolutely crashing. It's almost down 3.5-4%. And I don't use these words lightly and I don't use them often. But there is such panic right now around bank stocks itself. It's really showing up 4% down on the bank nifty. Now let's fire up all the banking losers, financials, bank stocks. So Bank of India, Bank of Maharashtra, PNB, Union Bank, cuts between 3, 4, 5, 6% depending on which stock you're picking up. Canara Bank, PSUs are getting harder hit actually. SBI itself is down about 5%, 4 to 5% last I checked. So this is the first hit. J&K Bank is down 6.5%. Bank of Maharashtra 8% at this point in time. This is the first hit. Let's see. The market is trying to digest it. By the way, the Nifty is now looking at a near 700 point fall, 670 points. It's almost a 3% decline at this juncture. The mid-cap index is down 3%. The bank Nifty, like I said, is down about 3.5% as well. Let me just check what the defense index is doing. Nifty India Defense is also down. It's not a morning where the defense index can buck the trend. It's down about 3% as well. So really there is not a single index at this point in time that's in the green. 1% down on IT. Banks we've already discussed. Oil and gas obviously is down. PSU banking index is down 5%. Nifty Bank 4%. Nifty Financials 3.5%. Nifty Auto 3.5%. It's just a complete and total risk off at this point in time. I think our next guest, Rahul Arora, should be joining us in the next, couple of seconds. In the meantime, if we have Vishnu, do we still have Vishnu? Let's take final advice from him. Vishnu, if you can hear me, this is one of those absolute total collapse kind of mornings. What's the final advice that you'd leave people with on stocks, on the general setup, on trade? You started by saying this is a good day to buy Nifty ETFs. I remember that. So just continue with that. Wrap up overall advice, traders, investors, what to do today.
Yes, definitely. I again, reiterate my view that this is a very good point to accumulate Nifty ETF for a long term, because I'm not expecting. See, it's a panic selling in the market, right? So if there is a sellers coming in the market, definitely there will be buyers will come in the market from the lower levels, because so many value stocks are down, having said that 20%, 25% from their 52-week high. So I'm not expecting market to fall below 22,500 sort of level. So definitely that's a very golden opportunity for a long-term ETF buyers. So again, I repeat my point. Second, for a intraday buyers, I'm seeing Coal India is showing some sort of resilience. Prices are up around 0.5% despite all market is down. So I think if there is any compulsive buyer in the market, for him or for them, Coal India will be my preferred buying pick for today's trading session. Yes, market is witnessing bloodbath, but still I am giving a buying recommendation in Coal India for an intraday perspective. Maintain a stop loss below 436 and target will be somewhere around 449.
Okay, all right. So that's as far as some individual stocks and the overall perspective is concerned. On the Nifty itself, Vishnu, so 23,744, we're anyway trading below all key, I think, technical support levels, all key moving averages. Now, a lot of people will argue this market is deeply oversold, but that's okay. It needs a trigger. It needs a trigger to turn around. Do you see any next support in sight? Anything else in line?
See, you next comes from 23,500, which is also a 61.8% retracement of previous update.
Okay, I think there's a audio disturbance with Vishnu. Vishnu, I think there's a little bit of a trouble with your line. Okay, let's just try that again. Yeah, Nifty supports. Much better now, much better. Yeah, go on. Yeah.
Well, so on a weekly chart, I'm expecting prices to, extend the fall towards 23,500, which is also the proximity of 61.8% Fibonacci retracement of previous up leg that started in March 25 and ended in, somewhere around December 25. So that, measure up leg of around, 21,800 sort of levels to 26,000 levels. The 61.8% Fibonacci retracement comes somewhere around 23,500. So market is all set to decline towards that level. If market goes below that level with full conviction that the next support will be around 22,800. So yes, market textures for a short term is completely bearish and there is no any buying opportunity for short term traders in the market.
Yeah, I was just looking at levels. Let's see if we can fire up a 1-year Nifty chart. We've practically undone everything over the last 12 months. We've gone back to the levels that we saw in April of 25, 14th of April 2025. And this is when the mayhem of the trade tariffs, when President Trump had announced his Liberation Day tariffs. That was 2nd April. After that, markets were collapsing. And then there was a bit of a recovery. So now we've gone back to those kind of levels with today's decline. So let's see, we haven't breached the 2nd April Liberation Day low, but this is practically where we are at this juncture. Vishnu, thank you very much. Helpful advice today on a very, very difficult morning. Good luck to you with your trades and thanks for joining in. We'll connect again soon. Thank you.
Thank you.
All right. Well, with that, okay, let's go back and check the Nifty. Can we fire up the Nifty? What's the Nifty doing? 730 points lower, 3% down. Mid-cap index 3.5%, Bank Nifty 4%, PSU Banking Index 5%. That's what's playing out. We should just fire some of these indices. They really tell the story of the kind of morning that this really is. With that, let me welcome in our next guest on the show, Rahul Arora, CEO of Ashika Institutional Equities, joins in. Rahul, good morning. What a day. A lot of firsts. You and me talking for the first time on Money Control today. It's the first time I'm talking to you in your new role. Congratulations on that as the CEO of Ashika Institutional Equities. A lot of firsts, but look at the market. I mean, and what a market. And Rahul, I think in your career and my career, we've seen a lot of mayhem mornings. But I must say, I was trying to rack my brains to remember if we woke up to a morning where oil was up 25%, just in that one morning. But that's what we have, a full-blown war in West Asia. Let's start by what would your first advice be to people who've not seen the kind of chaos that you and I have seen? A lot of new investors who would have come in post-COVID, who don't know, how to deal with all this. So let's start right there with a bit of human advice, and then we'll talk markets.
Morning, Surabhi. Thank you for having me on your show. You're right. I think, I'd have to span back my career 25 years, and I still can't seem to recollect on a day when we woke up where oil was up 25, 30%. You might have to go back into the early 90s when the war on Iraq happened. And, I may sound like a bit of a broken record on your network, Surabhi, but, the reasons may have been unknown. And of course, we could not have forecasted this. But I have not been too constructive on the markets for the last 15, 18 months, as you know. The broad range for the Nifty for me has been 24 to 27,000. That has not changed. Were the Nifty to, sustain below that level and crude inches up to 125, 130, then we don't know where things could head. Now, there is no point catching a falling knife, right? I often tell people that if you're buying a stock and you're expecting that stock to double theoretically, it's okay to buy it 20% off the low and sell it 20% off the high and try and make the 60% in the middle. That's the same thing that I would advise investors at times like these. Don't try and buy into days like this where the market has fallen thinking that you may get a dead cat bounce, which you might. And I think you have to be a very adept trader to play that, which most of us are not. So I would just say, wait this out, because if you have a situation, Surabhi, the news overnight is that the US themselves are surprised that the Israelis have attacked, 30 sites of petroleum and related in Iran. And that has caught them also by surprise. Now, if you have a situation where crude goes, say, to 130, 140, and the Nifty goes down to, say, 20,000, theoretical, not improbable, but theoretical at this point in time, then what happens to the people that buy today? So I think let's not try and be brave. We cannot even understand the magnitude of the situation sitting in South Bombay here. Let's wait it out. But, my mind goes back to Surabhi when you and I were colleagues in another network at Bloomberg UTV, in 2008 when the meltdown happened. This has reminiscence of that. I don't think this can probably become full-blown to that effect, but I would say tread with extreme caution, and this is not the time to be a hero, is what I would say.
Completely agree. Couldn't agree more, Rahul. Indeed, and that's the first time that you, me, and people of our generation saw what a complete financial meltdown of the world looked like and felt like. I think this is the time that at least people of my generation are now understanding what a full-blown, real global conflict looks like, at least a West Asia conflict, because I was too young during the Iraq invasion of Kuwait. As a kid, I don't remember, but yes, I remember some headlines coming on news talking about the oil price shock then, and now it's really playing out in markets which are far more interconnected, far more complicated, and indeed this is playing out. And it's still the problem is it's 8-9 days of hostilities, and not a single de-escalation note has come from anywhere, or a conciliatory voice or something from the UN, whatever. In fact, I'm just seeing the latest headlines. This is, of course, as of late last night. I think the US has ordered all its employees in the embassy in Riyadh to leave immediately, immediate evacuation orders for all American personnel in Saudi Arabia. Stuff like that doesn't give confidence to markets. Clearly, there's something that's way, way, way off the mark, when you get the visuals and the news updates that you do. So, with that is the first point, and the point that all our viewers should take, that there's no point trying to catch a falling knife. I want to focus specifically on banks. And I think some of these things are confounding, Rahul, because people would expect that long-term portfolio builders will use days like these, and this has been on for 4-5 days now, to start building portfolio positions, and you'd expect them to come to banks. A lot of our viewers on Money Control today on our YouTube feed all had questions on banks, saying, I want to buy for a year. Which bank stock, which NBFC stock can I pick up? But look at the collapse. SBI 5.5% on our screens, HDFC Bank 4-5%. what do you think the concern is? My reading was that between Friday and today, the market has woken up to the fact that oil at 120 or 115 is an India risk. It's an India macro risk that both the government and the RBI will have to respond to. Is that what the equity market is pricing in with this kind of a collapse?
No, so I think, Surabhi, there are 3 or 4 points here. One is we are not buying crude at 120, right? We have been, quote unquote, allowed to buy Russian oil at cheaper prices by the United States. And our inventory that we have been buying from either Russia or the United States or Venezuela is coming at very, very low rates. So obviously, India has a certain amount of inventory that it has purchased at low prices. Now, the issue happens is if that inventory starts getting depleted and you have to buy them at higher prices. I don't see India buying crude at 120. That's not going to happen. But yes, if we're going to buy it at relatively higher prices than what we have been at 45, 50, 55, whatever that number may be, obviously there are 3 or 4 implications. First, it has a current account deficit implication. It also has a GDP implication because it is going to have an impact on consumption-related growth. Prices are going to be passed on in sectors which are crude dependent, and there will be an impact on that. Now, the question is this going to be that significant to alter the India story? I don't know, because if you get into a situation where crude, say, hovers between 100, 120 for about 6 months, then I can understand it becomes a serious risk. But I think if this is just transitory and maybe in a week or so from now, you're back to say levels of 75, 80, which can probably happen. I don't know how, but it can happen just like the way it's happened on the way up. Then you get into a slightly better situation. I think the RBI, Surabhi, has preempted this. They have announced measures going into the weekend to try and stabilize the rupee as well. But to your point on how this all ties up into the India story, I would wait and see. This is going to be a global inflation shock. So that's the second order impact of what's happening. The first is what you're seeing that's happening right now. The Strait of Hormuz is still closed, as we know, and I think 30 to 40% of the global trade passes through that strait. So all of this is going to have a second order inflationary impact, which means that any rate cuts that most central banks were thinking across the globe, India included, probably go out of the window at this point in time. To your question on banks, Surabhi, I think if this conflict had not happened, it was a straight buy. Because I think if you looked at the numbers that came out for the scheduled commercial banks, non-food credit growth that came out last week itself, you've had credit growth head into the teens at 13.5%. Deposit growth has moved to about 11.5%. And within that, it's been driven, the credit growth by vehicles. Housing is not doing too badly, although tapering off. So, if interest rate cuts are done, the pressure on net interest margins is done, asset quality is okay. For most banks, cost to income ratio is coming down and valuations are nowhere close to what we saw in the last super cycle, where you would remember that banks have traded between 3.5 to 5 times price to book on a 1 year forward. Today, no major bank in India, even private sector, at this point is even trading at maybe 2.5, maybe 2.7, 2.8 at best. So I would certainly think that if you have a horizon for 2 years, banks is the clear number one overweight for me. But would I, again, Surabhi, at the risk of sounding repetitive, would I rush in to buy today? The answer is a clear no. But yes, I firmly believe, Surabhi, and I have said this before, that wherever this settles, whatever is the low of Nifty in this run, I do believe the Nifty has a very genuine case for appreciating 40 to 45% between now and next Diwali. So if you have an 18-month view, I think you will make a lot of money in this market. Don't try and catch the bottom, and banks would be the number one overweight. Don't forget, Surabhi, this is the largest overweight. This is the most favorite sector for FIIs. And at times like these, FIIs are not dying to put in money into a market like India, especially if I'm getting the US 10-year at 4.5%, which is practically risk-free at this point.
Speaking of the 10-year, last I checked, it was at 4.2%. Let me see where the 10-year right now is. They are still at about 4.2%, and then the market will open this evening, and then we'll get the full-blown impact. But Rahul, I realize how you quietly skipped this Diwali 26. So Diwali 27. By Diwali 27, you might make a 40% return in this market. I noted that, but that's a point well taken. This is not a market for the short-term trader here and there. This is the market for the patient who can ride this out over the long haul. Rahul, stay on. We were talking about macros and what oil at 115 means for India and for the world as well. I have someone who can really answer that, better than most around on the street. Taimur Beg, Chief Asia Economist at DBS Bank, is with us. Taimur, good morning. Thank you so much for joining in. What a pleasure to have you on. Taimur, you know what? I reached out to your team when I read your note, which was, I think, written on the 2nd or 3rd of March. And we were all hoping that this is a 2-3 day event and then it kind of, you know, it has to be contained. Nobody wants a war. But I think all of us have been proven incorrect. What a Monday. Let's get your opening thoughts.
Indeed. I think that nobody wants a war should be qualified with, there are some beneficiaries to the war. Israel does not border Iran, and therefore the conflict in Iran, other than a few missiles and drones, does not really affect Israel that much. So I think Israel doesn't have that much problem with continued conflagration. So then we have to sort of shift our focus onto the US, which is the other key party in this fight, that to what extent does the US want a protracted conflict? The view has always been, and I think the market is trying to transmit that view to Donald Trump in real time right now, is that a very high price of oil is debilitating for the entire global economy, and it will be terrible for inflation in the US. And if Donald Trump wants some degree of stability in his own backyard, he would want oil prices to be lower, and therefore the motivation for keeping this conflict protracted would be less. But you hear from the White House, I guess this morning, that oil price for a short while is a price worth paying. That's a kind of signal that the market would not appreciate and therefore will keep on bidding up prices. In terms of ground level development, it is not the fact that there has been, major sinking of oil tankers or LNG carrying ships that have been sunk by the Iranians so far. It's the threat of that happening that has brought the straits almost to a proverbial standstill. Insurance companies are not providing coverage, and the freight rates have gone through the roof. So we probably would need, even if the conflict continues, some degree of action in the Straits of Hormuz that allows for some movement. If it remains, for all practical purposes closed, we have a very big problem.
Yeah, absolutely. So usually, when we get hit like this, we all go back to history and try and understand what history can tell us. And that's what, Rahul, we were just having an equity conversation. That's what Rahul and I were discussing, that I think we just go back to the Kuwaiti invasion, right, in 1990 and 91. But I don't recall if the Strait was completely shut at that time or not. We haven't seen all West Asian countries get embroiled in a regional conflict. It was always the Iraq-Iran war or the Iraq invasion of Kuwait. But this is an entire regional conflict. So what could we be in for if hostilities don't come down, if there's no off-ramp in the next couple of days?
Right. So geographically speaking, just to hark back to the early 1990s, Iraq is way upstream, and therefore its ability to shut the straits down is, almost impossible, whereas Iran basically extends hundreds of kilometers along the straits, including the narrowest choke point, and you don't need drones or missiles to shut the straits down. A small boat, not a Navy boat, but a small boat with mines can create havoc in that little choke point. So the expectation is that, somehow or the other, the Americans have to underwrite the security of the straits now, that there will be U.S. Navy ships escorting tankers through the western side of the strait, which hug Saudi and Qatar and UAE and so on, and bring them out, which would mean that it would be costly, it would be slow, but it would not be impossible to take LNG out of Qatar or crude oil out of the eastern part of Saudi Arabia and Kuwait and UAE and so on. So to me, that is, in the middle of this rather uncertain times, probably the better case scenario. The worst case scenario is that, for a week or two, we see shutdown. And then, as Rahul was saying, it's an unambiguous and substantial energy shock for the entire global economy. Will not shield the US just because the US is energy independent, would not shield China just because China has large strategic reserves. The price point would be much, much higher, and the pass-through to inflation, which then hurts company earnings and by extension affects GDP growth and worsens current account balance. All of those things will play out.
Sure. So, Taimur, now let's come to the next order, which is trying to understand the implications for India, which is heavily dependent on this region for imports. And sure, but now the Americans are being very graceful, quote unquote, by allowing us sanction-free Russian oil imports. But the point is that there is a force majeure across most of the gas suppliers. And we've seen we've seen all the equity market statements, right? From a Petronet LNG, Petronet has told all its customers that it cannot supply the promised amount of gas for obvious reasons. What does oil at, say, 100 or 110, what kind of a shock does it deliver to Indian macros?
Right. So this is more likely to be an LNG shock than a crude shock, because crude oil is amply supplied around the world. And whether it is India or any other country in the world, there are alternative suppliers. The problem is with LNG, which is very specific and very substantial amount is coming from Qatar, and not that many substitutable options out there as opposed to crude oil. And hence the gas story, in my view, would be more pertinent as far as the macro impact is concerned. And of course, feeds into electricity prices and so on. We have run some numbers for India at a average $100 per barrel oil for all of 2026. About 0.5% of GDP gets shaved off from the growth, and about 0.5% gets added to inflation, and current account worsens by about 0.2%. So 0.6% worsening of current account, 0.5% upside to inflation, and 0.5% downside to growth. Not a deal breaker. It doesn't make India an unambiguous sell in terms of global investor sentiment is concerned. Life can go on, but it certainly hurts welfare. It certainly hurts company bottom line and profitability. And there really is no way around it. And then, of course, the fiscal question comes in. Do you subsidize and make sure that the average person on the street does not suffer from $120 oil? And do you take it one for the fiscal? It would really be an unfortunate development given how nicely the fiscal trajectory has worked out the last few years. And now we might have to let some of it go if this becomes rather protracted.
Okay. Let me go back to Rahul as well for some thoughts. Rahul, so we've had some sort of an assessment that Taimur has given us on what this could mean for equity market investors. What would the advice be? What should the approach be? I mean, if you have 100 rupees to invest, do you like stagger it out and put maybe 25 bucks today? What do you do in markets like these?
I think it's a very pertinent question, Surabhi. And I think at a time like this, the default is to head towards fixed income, government securities, and something like gold, which is a natural hedge that people see. So I would not be surprised to see allocations for people who have a slightly shorter term horizon shift immediately. I don't think for people who have a longer term horizon, it will dent things too much, but it is just counterintuitive. Now, Surabhi, I think let's just put the year in perspective. What exactly is happening, right? Why is Trump 2.0 so different from Trump 1.0? Trump 1.0 did not have the House. He had the Senate. He has the Senate and the House now. And in all probability, he's going to lose the House in November, and they're going to start impeachment procedures almost immediately. For all your viewers who are Game of Thrones fans, there was a line by Littlefinger, played by Lord Baelish, who said chaos is a ladder. And I think if people think this is the end of global conflict, I think they have another thing coming. I think this is going to be a year where it's going to intensify, because he needs all of this to take away issues that are hurting him in his domestic ratings. And I don't want to get into specifically what they are, because other news networks, general news networks, are documenting it in abundance globally, in terms of where things are going wrong for him and what could lead to impeachment. So I think that's the fundamental difference between his first presidency and the second presidency. There is an intuitive underlying in sending a message to China. I think you saw the US official and the statement, which shocked the daylights out of me when he made it on Friday or Saturday, where they said that they will not allow India to become as powerful as China, which was quite something for a foreign national as high as he is in the Trump administration to say that on Indian soil. But I think this is a year that's going to be marked by geopolitical disruptions. It is playing to a script. He wants this to happen, and he's going to try everything to disrupt the midterm elections, is the way I look at it, because there's too much material on him right now to be tenable in the United States. If he somehow gets through this term, he's probably going to run away before it ends, So, but that's my sense. And I don't think we should be surprised with what's happening. So I think, the reason I gave this as a slight detour is to make your investors understand, or your viewers understand, that this is going to be a challenging year for equities. And I would not think that it is imprudent to at least allocate 50% of your investments into government securities, AAA rated bonds, fixed deposits, or even something like gold. I think instead of stock allocation and sector allocation, look at wealth allocation. That might be the bigger theme this year.
That's advice very well taken. And, coming from someone who's largely spent his career looking at equities and telling people to build portfolio in equities, I think, I'm paying a lot of close attention to it as well. But Taimur, now to come back to even the fixed income markets, which are having their own very, very peculiar characteristics playing out. We're seeing yields rise. We've seen that on the US 10-year. And this, you typically expect that in times of crisis, in a risk-off environment, everybody runs to the safety of bonds, so yields should fall. But this is a global situation where the risk is emanating from an oil shock. So there's the inflation concern as well. What would you expect on global yields, on yields here in India? At some point, would you, expect central banks to act either way? Or do you think central banks will simply stay put? They've been the best investors. They anyway invested in gold ahead of everybody else. Gold is not rallying actually as much as you would imagine it should in a situation like this. Maybe because it's already had its share of the rally. So your thoughts on how these other asset classes are reacting and behaving in this unprecedented conflict?
Just a quick word on gold. It is at such nosebleed levels that it is destroying genuine demand with respect to jewelries as well as central bank buying. Yes, in dollar terms, central bank buying of gold was substantial, but in quantity terms, they've come down sharply simply because gold prices are so high. But the financial aspect of gold is substantial. So every single hedge fund under the sun is trading gold and has been very much long gold as a de-dollarization trade, as a risk aversion trade. But on a day like this, when long-term yields are jumping, it's a negative for gold because, traditionally at least, the rates and gold have a negative relationship, which sort of broke down 2 years ago, but seems to be coming back in times like this. So safety, the definition of that has also evolved. U.S. Treasury used to be the go-to place for every single risk-off period, but given what has happened under Trump 2.0, there may be some degree of reservation among investors that, maybe I buy European bonds or Japanese bonds or Chinese bonds for that matter before I sort of park all my money into the US treasuries, simply because underlying all of that is the dollar view. That dollar may appreciate on a very temporary basis around deep risk aversion, but on a structural basis, dollar is a sell. And from a cross-currency basis, that makes local currency bonds outside of US jurisdiction more attractive. And we've seen substantial flows akin to that in the local currency bond market space take place in the late part of 2025 and early part of 2026. I expect that to continue. But for a country like India, where fiscal bill will rise on if oil remains substantial and some of the subsidies have to be addressed, that cannot be a very positive development for the short or the long end.
On that point, Taimur, and we're coming down to the final thoughts in this conversation, India, how clear a risk is the fiscal deficit situation becoming now? If this lasts, and let's say oil remains range bound between 90 to 100 and it doesn't cool back to 70, then are we running the risk of slipping on our fiscal targets? What kind of response would you expect from the government? And what response, if at all, would you expect from the central bank, given that the currency is also weakening and we've seen levels of 92.23 this morning on the rupee?
I do think that there are some mitigating factors in place. We're coming at this crisis from a point of improved fiscal metrics and fairly low inflation pressure, and hence some upside to inflation from oil going up, some risk to subsidies, in my view, are very much manageable in the totality of that fabric. I don't think the authorities have done anything damaging to the fiscal outlook over the last half a decade, or last 4 years since the pandemic, which then blew up the fiscal. After that, we've seen steady consolidation. Why do we do that? So that when there's a rainy day, we can take some leverage. And this is the time to do so. So I think that a substantial degree of uncertainty around inflation can be mitigated to some extent by fiscal, without necessarily undermining the overall fiscal picture. The markets would understand. Just like the markets would understand if central banks don't raise interest rates right now, because as it is the case, it's a volatile item, you should see through it unless there is evidence of that spilling over to a broader range of prices. I would use the same argument for fiscal. Overall fiscal trajectory is positive. Some deviation from that on a temporary basis to shield the population the markets will understand.
All right, got that. Rahul, final word. I mean, and a quick 30 seconds on this one. Again, I go back to the central point. You've made your case very, very strong that don't look at individual stock allocation right now, look at overall asset allocation. For equity, the equity part of that asset allocation, what would you recommend? What should people be doing over the next couple of days till this finally settles, whenever it settles?
It's a very tough call, Surabhi. I think, in Hindi we say, Umeed pe duniya kaayam hai. That's pretty much what we're down to right now. I don't think there's anything that any of us can say that will make it better right now. I think it requires an immediate end to what's happening. I think, Surabhi, we're discussing this from the point of view of equity markets and economy and CAD and FISC and this and that. Lives are being lost. One school that was hit, 160 girls died. I think we're just losing the plot. I think we're all in the business of money. So sometimes we lose our mental balance completely. And I'm saying that myself. And we talk about utter nonsense. And I think this is, there is something that is going on that is far more important than money and stock markets. And I think the sooner sanity prevails, the better it is. The markets will follow, earnings will follow. But I just hope from a humanitarian standpoint, what's happening ends, because it doesn't look like it's ending anytime soon. I mean, if Iran wanted to end it, they would have just started channel talks with the US, but they've named the successor, and he's the son of the previous supreme leader. So I don't know. I just hope better sense prevails, and nobody is here to catch a falling knife. I mean, unfortunately, it is our business. I would say just stay clear till this settles. You'll know when it settles. Even if you buy the index 10-15% higher, you're not going to lose sleep over it in the longer period, over a longer term investment. But just from a humanitarian standpoint, I just hope this nonsense stops once and for all.
Absolutely. A small admission, I couldn't say that given all the big India fans around me yesterday. But while that match was on, I could just not peel myself away from the horrific headlines that were coming in from West Asia. Talks about rain caused by the fire at these depots, and that rain containing oil, toxic air, and all that is happening with these bombs and these missiles really raging across the entire region. Taimur, last word with you. This has been a very, very helpful conversation from an economy standpoint, global economy, India economy. What are the next most important things to watch, whether in terms of indicators, levels, or numbers?
So, Surabhi, I suppose, first of all, fully concur with Rahul's point that there is a bigger issue at stake, which is, people's lives and probably, substantial, almost permanent degradation or destabilization of the region. But as far as near-term markers, beyond once we start sort of, getting used to the fact that oil and LNG would remain substantially elevated. Second question is that, what happens to oil marketing committees and what do they decide in terms of passing on the prices to the retail level? So the wholesale impact, retail impact would be the next things to watch. Then within a month or two, we'll start seeing guidance from companies that, how this is affecting their bottom line. Until then, the key thing to see would be the channel checks on the retail side. How is this price shock impacting people's wallets? And is that leading them to spend less on other things? My view is that in the very near term, we're not going to see any impact. This will take a while to trickle through to consumer behavior. Consumers are not that knee-jerk in terms of their spending patterns. You would need it to last for 3, 4, 5 weeks, and then we might start getting some data. So March data may not be that helpful. April would be the full set of data, which will spill over as far as availability of the data is concerned in May.
All right. Okay, gentlemen, thank you so much for joining in on a very, very difficult morning for humanity, for markets, for all of us. But I think your insights have been very, very helpful in providing some direction, some clarity to all of our viewers. We hope this draws to a close pretty soon. And we hope both of you have a good day in the interim. And I'm sure we'll keep these conversations going in the near future as well. Thanks for joining. Thanks, Taimur. Thank you, Rahul, very much. All right. Well, with that, let me actually play out some of the sound bites that came in yesterday. If you're hoping that there is any hint of a de-escalation, some sign of a reconciliation, it just wasn't coming through. One of the American networks interviewed the Iranian leadership and asked them about whether they were willing to surrender or not. And they went back to their offer of stopping bombings across their neighborhood and how they say that was torpedoed by President Trump. President Trump himself was asked that question about what happens with the oil now, escalating and the war itself escalating. Hear out what both the sides, Iran as well as the US, had to say. We'll be right back.
What are the circumstances where you'd send in ground troops? How are you thinking about that?
I don't even want to talk about it now. I mean, that's. I don't think it's an appropriate question. I'm not going to answer it. Could there be? Possibly, for very good reason. Have to be very good reason. And I would say if we ever did that, they would be so decimated that they wouldn't be able to fight at the ground level. A lot of negotiating leverage, maybe maximum, but we're not looking to settle. They'd like to settle. We're not looking to settle. They're on their third or fourth level of leadership, and they have leaders right now that nobody even knows who they are. They're being decimated now. At some point, I don't think there'll be anybody left maybe to say we surrender, but they're being decimated.
The enemy wants us and the Islamic countries to be at war. They want to create division between us and them. Time and again we have said, and continue to say, that the intention and the goal of the late leader has been that we consider the neighboring countries as our brothers, and that our relations with them should be good. But what is happening is that if from any country they attack our soil and carry out aggression, naturally we are obliged to respond to them. When we respond to them, this does not mean that we have a dispute with that country. It does not mean that we want to upset the people there. Our Iran, our country, will not bow easily in the face of bullying, in the face of oppression, in the face of aggression, and has not bowed. And it is not possible that our heroic nation will retreat easily in the face of threats that they make.
Okay, that's the market for you. Not much of a respite, still down about 680 odd points at this juncture, with the Bank Nifty still down about 4%, mid-cap index down about 3%. So that's where we are at 10 o'clock this morning. The Moneycontrol team has been, of course, going over all the details of how individual sectors and companies are getting impacted by this war, as gas supplies are cut off, as there's uncertainty on crude oil supplies, and the price of oil itself has gone up. We have Aishwarya Rai of Moneycontrol joining in to give us, some inputs on how this is really playing out. Hey, Aishwarya, morning. What a morning. I can't say good morning, but it's
yes.
really, really difficult morning really playing out. By the way, beg your pardon, not Aishwarya Rai, Aishwarya Nair, but yeah, that she's with us now. So Aishwarya, what is your analysis throwing up? Because over the last week, we saw a lot of Indian gas companies, Petronet LNG, declare force majeure. They're simply not getting gas from Qatar, so they can't, give gas to their customers. A lot of companies are talking about limited supplies. Tell us more.
Good morning, Surabhi, and thank you for having me on. Now, to put things into perspective, let me start with that India depends on Qatar for 50% of its LNG supply. So, now that's a greater number, and some of the companies and key sectors that are impacted. Let me just break it down to you. It's like there is definitely the fertilizer industry that is the most impacted. It sources some 40% of its LNG supplies from Qatar. Now, when I spoke to some of these fertilizer players, they've said that they have some 4 weeks of stock left with them because the last season wasn't that great, so there is some leftover stocks available. But however, if the war prolongs and the supply disruptions exist for a very long period of time, the companies might have to seek for alternatives. Like alternatives could be from Russia, Australia, or the US. But ramping up these supplies overnight will be a huge task for these companies. Secondly, they are also looking at maybe changing the fuel source to coal or diesel, but then again, changing the entire manufacturing functioning for that itself is a huge task. So, what they have, gotten cues from their shipping contractors are that the supply disruptions may not last for a very long time. So they are also awaiting a net impact on what is going to happen by the end of this week. So that is about the fertilizer industry, which is among the key users of LNG in India. Secondly, as you mentioned about Petronet, one of the major midstream energy player, which operates the LNG terminals in India, they have 77% exposure to Qatar for its LNG imports. Now, if the supply disruptions are too prolonged, then they might have a heavy impact on their margins, is what the sector analysts are of the view. Now, Petronet also might have to scout for alternatives, but that again is not an easier option given the current situation that is ongoing. Now, the other sector that is impacted is the LNG truck operators. Now, LNG truck operators are one of the major beneficiaries for this low emission transition of major companies like JSW, Tata Steel, Aditya Birla Group, etc. So, these companies, example, the major fleet operator, that is the Green Line Mobility, they have also said that for now the stocks are available with them at least for 3 to 4 weeks. However, they are also in talks with some other country suppliers in case the supply risks prolong, and so that they have some backup. Um, that is with the LNG operators. Green Line is one of the key LNG operators with around 900 LNG trucks under them, and these are used in the cement and steel plants. Since they also have this goal for low emission, LNG is definitely India's major source to convert into a low emission economy, and we have a 15% target by 2030. Now coming to city gas distributors, I think Gujarat Gas is the most impacted compared to the GAIL or maybe a Mahanagar Gas because of the exposure. Again, Gujarat Gas has more than 70% exposure to the Middle East for its LNG supplies. So for Gujarat Gas, any impact would be both margins and volumes here. And one of the key industrial sectors it supplies LNG to is the Morbi industrial sector, which heavily depends on LNG for its high temperature kilns. Now, for Gujarat Gas, again, it's a margin pressure unless they scout for alternatives. But yeah, that again depends on how long the war will last. In the end, if you see suppliers like GAIL or Mahanagar Gas, they have below 20% exposure to the Qatar for their supply. So they are fairly, safer here in terms of any supply risk. Yeah.
So basically, these are the major segments that get hit. Obviously, city gas distribution companies, fertilizer companies, all of them. looking at insufficient feedstock, at least at this point in time, unless things resolve themselves. And of course, then a lot of the ceramic players as well, the entire Morbi chain, because they rely on gas for their operations as well. Got that, Aishwarya? That was very helpful. Thank you for joining in, and we'll keep coming back to you over the next few days for more inputs in terms of how individual industry segments are coping with this crisis that we have at hand. Thanks for joining in. Thank you.
Thanks, Surabhi. Thanks.
All right, with that, it's time for us to wind down this edition of Opening Bell. And as I'm closing out our conversation today, the Nifty is still down about 2.75%. The mid-cap index is again down by about 2.7%. The Bank Nifty is really taking it on the chin. Bank Nifty is down 4% at this point in time. And the PSU banking index, that's down over 5% at this juncture. That's the Nifty Bank. Look at the Nifty PSU Bank now. PSU banks have been hit very, very hard, down about 5%. As we speak, the auto index 4%, everything and anything is actually down. Not even a single sector, not even the Nifty defense index. Even that index is down about 2.5%. Defense was the one island of green in the market all through last week. Defense stocks managed to hold out. Not today. There's profit taking even on defense names today. All right, that's where we will take your leave on this edition of Opening Bell. It's a wrap from the entire team that puts this show together. But as we go, I'm going to leave you with some important market commentary that the Money Control team has picked up. Lots of big market voices. Also, check out today's important stocks and news, along with some of the interesting broker updates. Thank you so much for watching.